Okay, good morning once more, guys. We're ready to go. For one, I'm very, very excited. Again, my name is Ajay Boatin. I am one of the committee members in Ghana for CFA Ghana. Um, the topic today, I believe we are in for an exciting time, is the introduction of Ghana Gold Coin. I believe everybody on here will have various questions, and as we're going through, I encourage everybody to ask your question, whether through the chat, or you can sort of wait towards the end and we can sort of have a very sort of formal sort of conversation around the question that people might have. I personally am very, very excited about this. I have my own biases. But to set it off, it's just good to sort of try and get a context of what is happening around the world. Just over 2 years ago, the advent of Russia and Ukraine and the advent of the US seizing over 300 billion of Russian sort of reserves in USD has triggered several sort of effect. And it's encouraged a lot of people to actually look for alternatives. And one of the main one has been gold. In fact, over the last sort of 30, 20 years, if you look at gold performance, given the difficulties that we've had in Ghana, if you had allocated a little bit more to gold, it would have been a very beneficial part of our asset allocation, especially if you look at in a pension space. So I, for one, have several questions, but to get it off, let's introduce our moderator and our guest speaker. So our moderator is Elias Amisa. He's a CFA charter holder. He's currently a credit manager at First National Bank Ghana. He's held similar roles at StanChart in the past, but he does also have MSc in Petroleum Geoscience. I can't quite form the links there from Manchester University. And then our actual speaker is Emmanuel Ojam Boache. Emmanuel I've known for the last couple of years. He's currently MBA student at MIT Sloan. Prior to that, I actually did some work with him at CBG, where he headed the syndicated cap side of the business in terms of capital raising for various businesses and other things. He's also had similar things or various things with Fidelity Bank and Cow Bank. So Elias, over to you. Everybody, welcome to this session. Elias, can you hear me?
Yes, thanks, AJ, for that swift introduction. And then thanks, everyone, for joining us on this call. I think as industry professionals, when there's news on the industry in terms of any changes, it is important for us to come together and discuss and see where we are at in terms of, those new changes and how it impacts us as finance professional and the brother Ghana as a whole. So I think today the topic is gold, and rightly so, given that gold has always been a precious metal for centuries, and rightly so, it has held its place in human history, symbolizing wealth, power, and beauty for some. From ancient civilization of Egypt, where it was revered as the flesh of gods, to the Roman Empire, which minted gold as coins, which represented the standard of wealth. I think gold has transcended its role as a mere metal to become a pillar of economic and cultural value. Now, the story of Ghana is no different. I'm sure you and I remember when Ghana used to be called the Gold Coast, and gold has been mined, for centuries in Ghana. And we see it play major roles in our cultural settings as well. So for any of you who's been to Afashe or any festivals, you see our chiefs adorned in precious metal as part of their royal regalia during festival processions. In modern times, gold has also shifted from currency to a safe haven asset, offering a hedge against inflation, political instability, and currency devaluation. Today, as we face economic challenges and uncertainty, especially around rising inflation and the devaluation of the Ghana cedi, gold continues to serve as a symbol of financial security and wealth preservation. And in addition to this, investors usually use this as part of their strategic asset allocation. Now, with Ghana having mined gold for centuries, I mean, it's only right that each Ghanaian, that is you and I, have the opportunity to own a small piece of this precious metal. So I think for me, it is timely that the Bank of Ghana has introduced the Ghana Gold Coin, which will help to promote local investment, increase financial stability, and also help us in wealth preservation. And so today, that's why we're here. And I'm joined by Emmanuel Ojembuachi. AJ did introduce him briefly, but to summarize, Emmanuel is a seasoned financial professional with over a decade of experience in Africa's corporate finance industry, financial markets, and the capital market sector. Emmanuel is a CFA charter holder and also currently an MBA candidate at MIT Sloan School of Management. Emmanuel brings a wealth of experience and expertise in strategic leadership and financial innovation. As former head of syndications and capital markets at Consolidated Bank Ghana, Emmanuel was instrumental in establishing a department that developed a transaction pipeline valued at over $880 million US. His achievements including structuring Ghana's largest power sector deal and advising on high-profile funding initiatives in the tourism and beverage sectors. Emmanuel's extensive expertise and forward-thinking approach makes him a leader to watch in the field of debt capital markets, corporate banking, and financial advisory. Emmanuel remains passionate about the future of finance in Ghana and in Africa. And ladies and gentlemen, help me to welcome Emmanuel Ojem. I don't know if we have a clapping button, but just help me to welcome Emmanuel. Welcome, and I think you can turn on your video so that we can.
Yes.
See you.
Can you see me? I think my video is turned on.
Yes, I can see you.
Thank you.
Loud and clear.
Yes. Yeah.
Well, so thanks, Emma. I'll hand over to you at this point to give us sort of like a brief introduction or overview of the Ghana Gold Coin, and we'll go right into questions. And please, I mean, this is an interactive session. And I think one of the things we encourage as finance professionals is that we are all learning. So while we claim to be maybe experts in one field or another, there are areas also that requires new learning, new understanding. So please feel free to share your questions, your ideas, your thoughts about the programs or this GCC program in the chats, and we will be happy to pick them up and ask the questions. For those that we don't have answers, it will be for us, to go back to BOG and try to get more answers for you. So let's make it as interactive as possible. So thanks, Emmanuel. Over to you.
Thank you. Thank you very much, Elias. Thank you, AJ and then the CFA team. And also thank you, everyone that have taken time off their busy schedules to kind of also come together today for us all to kind of deliberate on this new financial assets that BOG is introducing in the market. So I'll make it more conversational than a typical presentation webinar section, so that we can get time to answer some of the questions and also deliberate on the key issues that people will need clarifications on. So I'll begin with a brief presentation for just 10 minutes, and then we have a question and answer session. I have a discussion with Elias, and then we open the floor so that everybody would kind of ask their questions also. So I would like to show a little bit emphasis on if I can get so I can share my slide. I have some 3-page slides. So basically, whilst I'm trying to share the slide, let's meet you a little bit. Bank of Ghana recently introduced a gold coin, and it's clearly stated this is not a legal tender. So basically, it's not like money, right? It's a financial asset. It's clearly stated. It's part of the pool of assets. It's part of the pool of assets, financial assets that now it's more like has been legitimized. And from Bank of Ghana's point of view, it's giving the local investor community an opportunity to also partake in the Ghana gold coin investment portfolio. So the G4O kind of gave a lot of opportunity for government to kind of buy BOG to buy gold, local source gold, which is purified at 99% purity. And now BOG deemed it worth that they give an opportunity to the investor community to also own a piece of gold. And why is this so? Because if you look at the economy now, you realize that investors' appetite for alternative assets has gone up because we have a city that is actually not performing too well. So one of the means of giving investors the opportunity to also invest in alternative assets instead of everybody buying and hoarding the FX or dollars, which really doesn't help any one of us. So BOG deemed it as a great decision to open up the vault and sell gold coins also to the investor community. And the gold coins, I mean, the features are very simple. It comes in different levels. We have the 1 ounce and half an ounce and then 1/4 ounce, which is like the lowest that you can buy. If in monetary value terms, right? In monetary value terms, the 1/4 of an ounce is somewhere like 11,000 Ghana cedis, because I mean on today's exchange rate when with it. So basically, if you are buying 1 ounce, you multiply by 4, you are looking at 44,000. Yes. So the objective of this is to give out or to allow investors to also partake by investing in gold. So why gold? Why would anyone even prefer investing in gold, right? Because gold over the long run has been a good hedge for inflation. No other asset class, I mean, has been that robust in terms of hedging of inflation on the global level than gold. So if you have gold, it means that you are hedged from inflation. That is one. In our part of the market here, if you have gold, I mean, you are not only hedged from inflation, because gold is kind of quoted in USD, you are more like indirectly purchasing USD. So you are hedged from USD in a way, right? So it gives you a good hedge also to the dollar. However, gold as an asset is also a tradable asset, right? So, I mean, as a financial asset, every financial asset can move up and can move down. So there is inherently some level of risk also built in there, because the price of the asset itself is also moving. It can move in any direction, right? So, I mean, you can gain in terms of when the city depreciates, but when gold prices are also declining, the net effect also would have to be looked at. But over a long period of time, if you regress the city depreciation as against the gold prices decline and gold, you realize that there's still a positive cover or a positive value for you to kind of have gold in your possession. So how is BOG going to do this? There are two. The features are kind of two, right? If you go in there for a gold coin, you're going to have the gold coin itself, and you're going to have the certificates, right? In some markets, really, people don't really need the gold coin itself, right? It's kept in custody on their behalf. But I mean, because it's the first time, and I believe that is because they want investors' confidence to kind of go up, they are giving you the option to even own the coin itself. So basically, it's like you are purchasing gold with 99% purity and having it with you if you want to. If you don't want to, there's arrangement with the commercial banks whereby you can easily deposit it there for a fee, which is yet to be decided anyway. So, I mean, it's kind of good. I mean, if you listen to the way they are going around the whole thing, it's kind of gives you an option, because I mean, I grew up not even seeing gold itself, even though Ghana was called the Gold Coast. I've never seen like a pure gold until I grew up and I did some transactions in the mining sector, which I insisted I want to have a few and a sea of Ghana's gold. I wouldn't have seen a gold before. So by this time, they are kind of retailing it and giving the option for you to have a gold with you. also in terms of selling, right? The pricing is very simple. They've made it clear the price will track the index, the gold index in London, and basically, there will be a conversion price, but basically it's like an international price. It will track the international price of gold. So basically, BOG doesn't really have any price control, or is not going to, control the prices. The price will be determined by the market. So it's free flow. It can move anywhere, and you can purchase it in cities also. So and in case of liquidity, the banks are ready to always buy it. Once there's an arrangement with the banks to buy it, in the event that banks are not able to buy your gold coin, BOG, is making provisions to ensure that they step in and buy, right? They step in and buy. So, in a high level, these are the key things that actually goes into the Ghana gold coin. It's an opportunity for you to own a real gold. It's an opportunity for you to kind of diversify your investments. It's an option for you in terms of purchasing of USD, and also they have made provisions to ensure that there is liquidity, whereby you can easily walk in and then sell to a commercial bank. In the event a commercial bank cannot, the BOG will step in. And also the price is determined by the free market. There is no government intervention or everything. So basically, those are the high level details of the Ghana gold coin, right? That's, I think, I would like to set the motion with. So at this level, basically, this is a brief of what option is in the market with regards to the financial asset for gold. Yeah.
Thanks, Emmanuel. I think that was a good introduction into the topic. Unfortunately, I think you couldn't share a screen because of the settings, but I think you have the option now. So maybe you can just share it briefly for people to have a look at it. But I think we will just go into the discussion, and then as we go along, we can catch up. But please also remember to leave your questions so that we can address them. So Emmanuel, I think, good introduction. I think for me, maybe the first question I'd like to ask, and maybe we need to address the elephant in the room.
Yeah.
The Ghana market remains where it is. Investors have been hurt, without question, in the last 2 years, when the DDP happened, and people who had invested in certain instruments had to take steep haircuts, and a lot of money was lost. So for any financial system or industry, the element of trust is key. For this particular product and investment, what level of trust can the common investor have that if I go and buy a gold coin today, I won't wake up tomorrow and I'm told that the value of the gold has halved and I've lost my money, or we can't even find the gold? I think maybe just to address that elephant in the room, to give people some sort of comfort.
Okay, sure. Thank you. So basically, from the question you asked, there are two key risks here. The risk that one, you might not, the trust that, hey, am I really safe with this kind of investments, right? And two, the value itself. Will the value tank? Will it be as valuable? After holding it for a while. And the first one is that, the gold is being sold into, you get two things by purchasing the gold. You get the gold itself, the actual gold itself, which is 99% pure. That's so far, that is what is known. And then you have the certificate. The option, I believe that because trust is low, right? That is why the central bank is actually even giving people the option to have the gold themselves and take it away without, you can keep it literally with you and have gold in your house. So that is to boost the confidence, because and as an investor, see it also from a certain level that you are purchasing gold, right? You have the gold. Once you are purchasing gold and you have the gold with you, the risk is kind of completely, in a way, reduced in terms of the risk of any external factor or anything happening and you not having your gold, it's reduced, right? So if you keep the gold, that risk is completely defaced, right? It's only when you have a certificate that you might be thinking about, hey, because certificate is a certificate, right? But gold is a real asset. It's a real asset that has real tangible value by itself. So if you have that, it's like you've gone out and then you bought like a car. The car is tangible, you know. So whatever happens to the car company, you don't care. You still have the car. Right? In terms of the value, just like any financial investment, everything moves. The dollar you're buying can move up, can move down, depending on with other currencies. I mean, it's quite unfortunate that we see it one way here, but that the city does kind of sometimes try to give it a show, right? So the city do sometimes appreciate dollar declines, and any other investment in the financial market, right, can go up. Even bonds go up and down, right? So basically, yes, there is that risk there. That's why you always have to consult an investment advisor when you are making an investment. That's why you always have to consult an investment advisor. You just don't literally go in there and buy, right?
Yeah, thanks, Emma. I mean, I think that's a good response, because I think it's important for every investor to know the level of risk they are entering into, and given the fact that you're able to actually sight the gold and take it home if you want to put it in your safe. I think, I mean, if you remember back in the day, we used to hear stories about our great-grandparents, leaving this world, and then we find gold bars in their portfolio, etc. I think it's interesting, where people will want to store their gold. But I think apart from taking it home, the option is you can also save it at your commercial bank, which is probably a safer bet than taking it home, which then exposes you to other risk. I think another question from me, and you touched on it briefly, is around price volatility. But beyond price volatility, let's talk liquidity. So, this cash is king, but now I'm going to use my money to buy gold. If I want to get that money back, I'm told that it's easy to sell. But if I don't want to sell my gold, is there an opportunity to use that as maybe collateral, Because if I had used it to maybe buy a house, I can use the house as collateral. I don't think that was addressed clearly in the BOG's question, and just wanted to throw it to you. Do you think it is a possibility that I have a stash of gold with my commercial bank and I can later use it for collateral to access liquidity to funding to meet my short-term needs?
Yes. So I mean, with this question, it can be looked at. The response comes in two different ways, right? So we have the commercial banks that are giving the loans, right? Yep. So and we have BOG, that is the issuer of the coins. And now BOG has made us aware that it is a financial asset. It's classified as a financial asset, right? So in technical sense, right? It's a financial asset that a bank can actually deem it as a financial asset on which they can give a loan, right? On which they can give a loan. However, even though we are waiting for the collateral, the actual categorization under the collateral pool, acceptable collateral pool from BOG, to include the Ghana gold coin as an acceptable collateral, right, for the banks to actually ride on it, even though it's stated in it that it's a financial asset, it might not be an acceptable collateral. But then the method that the bank, yes. So one, that clarification or that clarity needs to be made. And two, even if the clarity is made, it's up to every bank has their policy. I mean, the mere fact that BOG says it's a financial asset, right? And that, I mean, a bank might decide that, hey, we think the complexities with holding these things because they are moving. I mean, I'm giving you a fixed loan, 100 million or 10 million. I take a financial asset that is actually moving and can move against the value that I've given to you. So a bank will say, oh, then I think normally when you give a collateral, they give loan to collateral value, right? So
100%,
of a 10 million, I would say I'll give you a loan of 8 million. Now, the complexity of holding a moving financial asset is that you can give a loan of 8 million to a 10 million gold coin, but the gold coin is moving. If it depreciates and the next day,
then you are not fully collateralized.
I will be exposed.
100%.
So these are some of the decisions that banks will do make, right? But logically and realistically, if everything goes as we've seen historically from the trends, we expect that a gold will be valuable, because if you take a CD loan, the gold can reserve its value in terms of its dollar equivalent, and so it should be good. But then banks were subjected to all sorts of risk.
All sorts of.
Before they say
agreed.
Accepted that.
Yeah. Fantastic. I think if there's any, BOG person on the call, etc., I think this is a subject we need to again take up, because if I used all my 44,000 to buy 1 ounce of gold today, and I need some liquidity, I don't want to sell the gold. Can I get a loan? I think those are questions we can ask. But let me steer the boat a bit to a different angle here. So, fair enough. I think the idea of this gold coin is mostly for individual investors, the average working class person who can afford to buy 1 or 2 ounces, etc. Let's think of it then in the context of our fund managers, pension management, firms, etc. Is this something worth considering from that portion, as well as a pension fund, etc.? Can they also pool the resources they have and invest in gold, and perhaps maybe get to a point where this becomes a permanent part of their asset allocation?
I think yes. I mean, if I'm a fund manager, I would definitely consider it, right? I mean, because one, we are in an investment environment whereby there are not a lot of options. You get it? And everywhere you go, I mean, gold has always been part of a diversification pool, right? Pension funds, I mean, with the money they hold, they need to diversify so that one single risk, in finance, we call it idiosyncratic risk, doesn't really bring down the entire value of your portfolio. So basically, if you look at gold, having gold, I mean, it's actually a good hedge. And I mean, there's tons of research to also prove that a well-diversified portfolio over a long time outperforms a portfolio that is more like skewed, right? Gold definitely is something that pension funds, I think, should consider as a diversification of their holdings. And you look at our market, it seems that the options are not that wide, so pension funds are compelled to invest a lot in government securities, and this is a good option for them to diversify.
I think if I remember during COVID, as much as close to 70% of funds were investing in government bonds, etc., and that was proper risk, especially as we saw it crystallize when the DDP happened. So I think this gold initiative is sort of like it's a good angle to diversify, but I suppose there's still a bit more work to be done in terms of unpacking the underlying risk of the assets and the appetite of investors, because all of those things need to come into play. I mean, are there investors who are willing to actually invest in gold? Although as a pension fund, you hold a mandate, but investors need to, be workshopped on it. But I think it's a good opportunity for pension funds to engage. But let me pause here. I see there are a few questions in the chat, and maybe we can just do that alongside so that it's more interactive. So I have a question from Ness Harris, and I'll just read the question. It says, is there a plan for establishing a secondary market or exchange platform for the Ghana gold coin, allowing investors to buy and sell the coin easily? How will liquidity be maintained in volatile markets?
Okay, so I mean, as it stands now, I mean, we've not heard of any active secondary markets that can be traded, right? But then we know that there are liquidity avenues where you can walk to a bank and then literally sell it off, right? And also in the FAQs that was issued by Bank of Ghana, they are also working with some platforms international platform whereby you can trade. So currently as it stands is domestic. One thing that we also have to know is that I'm a fan of liberal markets and private sector taking the lead, right? If there are gold coins in the markets, right? Some investment bankers can easily kind of purchase a lot and then trade the certificates or create a market for it, or go to SEC, register it, trade it on the Ghana Stock Exchange, even tranche it down so that even if you have 500 Cs, you do understand, easily even go in there and have a certificate that derives the value from the gold which is in the vault. So it opens itself up for a lot of innovation in the market, right? Depending on if they are, because not everybody might have 11,000 to buy a quarter of an ounce, but then investment bankers can really bring it down and tranche it and then create a market out of it. It's an option that can be done. And I'll prefer even the private sector taking the lead on that, right? On the back of the gold, then BOG going down to the retail level, or the banks going down to the retail level to do that.
Yeah. No, I think that's a fair comment. I mean, we need, I think one of the things we need in this market is innovation and the ability to, sort of be curious around the potentials of these investment. And I think Bank of Ghana at this point needs to, engage with fellow professionals in the market to sort of come up with workable solutions around how this can be accepted, wholly within the industry. But I suppose that is sort of work in progress, because I think the immediate need is to get it off the ground and get people to actually know about it more. So I think the sophistication will come as people get more comfortable with the product and see that it is actually sustainable. Maybe I'll just take another question and then I'll see. Okay, so this one from Eugene Tavia is asking if we can get the slides after the session. And if there's a way to engage with us after the session. I think, once we're done with the session, we will engage with the organizers. There's always ways to reach out to CFA Society Ghana. In fact, we want more members because we do believe strongly that the more the market is active with professionals who are curious and want to get products out there, the more it is for our industry. But Imad, this question is key, from Lionel Picha. I hope I got the name right. Now here this, he says, please, I would like to know or have a fair idea of where the gold comes from in light of the current illegal mining saga going on as a sustainability proponent. I think this is key. I mean, the last 6 months, we've seen the devastation of illegal mining to our water bodies, our lands, etc. And this gold coin, there might be nuances around it. Does it further encourage this illegal mining, etc.? Because now people know maybe BOG wants gold to sell to the local market. What is your thinking on this?
No, I think it was stated in the FAQ from BOG.
Yes.
Gold are sourced from sustainable sources, right?
Yes.
Yes. In fact, they made us aware that, or it is known that the gold is, as a result of gold for oil. Do you understand the program?
Yeah.
So basically, there's gold that BOG has procured from sustainable mines, and given the opportunity to do that, and given that we are all in this country, and Galamsey is a collective. It's like a collective problem that we all need to solve together, right? It affects everybody. I'm tempted to say that I don't think the illegal miners, right, would be part of the program or are classified as sustainable sources of procurement for gold. So I don't think they are part. I believe the illegal miners, anything procured in an illegal way has its own illegal black market that they sell, right?
Yeah.
So whatever is happening in the Galamsey market, they already have their own markets, Galamsey markets that they do sell those things. So I don't think they are part of the gold coin. So feel free. If you want to buy, I don't think
And just to clarify and quote exactly what Bank of Ghana said, so they've said that gold used for the manufacture of the GGC is from traceable, responsibly mined sources in Ghana, in line with the BOG's responsible gold sourcing framework. So I believe there's a responsible gold sourcing framework that BOG has. Maybe we can find it online and read through just to satisfy ourselves. And I think, again, it's work that whoever is wanting to invest, especially if they are pension funds, etc., those are some of the risk things that they will need to sign off on to ensure that the investment that they are investing doesn't have, the ramifications of, it's being from a illegally sourced mine. But again, it comes back to the question. We need to solve for Galamsey on a separate, conversation. And we also have to, see how this GCC works. Let me just see from the chat if there are some more questions, and I'll just, read one or two more, then I'll come back on some of my questions. So there's a question from Anthony Mensah, who is asking, which particular asset class can the gold coin be placed? NPRA specification of alternative investment is clear. Okay, so I think he's asking that it looks like currently maybe gold coin is not part of the alternative investment classification or specification by NPRA. So the question is, where will it be placed? Assuming pension funds, etc., want to get involved. And I suppose, again, it's work in progress. This is new, and so there will be sort of teething problems or challenges that the BOG would need to respond to. But I just wanted to know your thoughts on that.
Yeah, so basically, I mean, it's a very good question. It's currently not something that's specifically classified by NPRA, right? But classification is just a function of reviewing of the policy, right? Mm-hmm. And then also on a higher level, on a philosophical level, it's basically an investment type. Is it an investment type? Does it have the features of an investment? Risk return profile, right? So basically, it's like you said, it's a process, right? For pension funds to purchase, definitely. I mean, in the issue of corporate bonds, when I was managing the investment banking department in CBG, basically, before you issue any instrument, you definitely will have to go for a classification, right? Yeah. And sometimes you have to go for to some extent, sometimes you have to even go for a legal opinion, defining it within a certain classification, right? Because sometimes it is not too specific. The other side, classification policies are not too specific. They are a bit more like giving the characteristics of what should be classified. So sometimes they are not even clear. So you have to even go to NPRA for interpretation, and also sometimes to go to the extent to which of procuring a legal counsel to give you a proper interpretation as to if it classifies as a certain instrument. And the weighting and all those things are things that needs to be clarified. So I think, yes, it's true. I mean, there is still some questions that needs to be answered, right? There's still some questions that needs to be answered. There's still some units or some key stakeholders that needs to be engaged, and certain documentation to be marked out clearly before we can really move on with that.
I agree completely. And I suppose that brings me maybe to a follow-up question, in terms of the dependence. So for this to work, there's a significant dependence on government and institutional support, right? I mean, we've seen government changes where priorities have changed in terms of what the government wants to do. In fact, we've seen tax implications on some of the products that we felt were coming in to create inclusion, like taxes on Momo, etc., and all of those type of things. What is the challenge here in terms of, I have a gold coin, maybe I bought it today for $2,000 an ounce, and tomorrow gold prices are $3,000 an ounce. I make a profit. Yeah. Do you think that there's going to come a point where there'll be challenges to this in terms of now government trying to tax this type of assets, etc., and all of that. I mean, because it's important. I mean, government holds a strong card, and when they say, the question is who audits the government or who challenges the government, and once it's implemented, what are the risks there in terms of, is my asset safe beyond the fact that, I mean, I can trade it and walk away and have all my money with me?
Yeah, in the world of economics, in the world of finance, there is nothing like it's impossible, right? Impossible doesn't exist, right? And theoretically, some things might look like impossible, like risk-free rate and all those kind, but in actual practical terms, there are possibilities that things can go off, like zero interest rate. So I believe that, but as it stands, there are no capital gain taxes on financial assets. And normally speaking, when you introduce a financial product, right, taxes are kind of stall the progress of any innovation. So you realize that there are certain even areas within the economy that are non-taxable, right? Real estate, for instance, so as to spare a lot of, because there's a need to spare up those demands. So I don't see taxes playing out in the immediate term. Remember, physical tools and monetary tools, right?
Yeah.
And work in tandem. Tax is a purely physical policy tool. And this is a monetary tool, right? A monetary policy tool, right? So it's aimed at kind of solving a monetary problem, which is more like solving an economic stability, right?
Yeah.
So physical and monetary policies will kind of, at a point in time, will have to be speaking to each other, so that the initiative being executed by the monetary policy will not be stalled by a physical intervention, which is a tax. And for it to work very well, right? I strongly believe that, I don't see, everything is possible, but the probability of a tax being levied on this gold coin is very low.
It's very low. Yeah.
Very low.
Again, anything that is new, there's questions to be asked. And so even for our Persian fans, before they need to go into this, I think these are some of the questions and things they would need to wrap their minds around, to ensure that, investors are protected. Okay, just let me revert again to the charts, and so that we just keep it going, so that we don't miss any of the questions. There's one from James Frimpong, and he says, he says this is not a question but an addition, and we'll take it. It says, data indicates that the current currency depreciation may also be attributed to regulatory arbitrage. The gold coin supports quantitative strategies to combat speculative behavior in the Ghanaian market, and I think that's true. I don't know if you want to just add a couple of comments on that.
Elias, you want me to speak on this?
Okay, sure. You can jump in, AJ.
No, this is James. That's
what James. Okay, sure.
Yeah, just to add to it, I think if you look at the other bigger central banks you have around, you have the Treasury, the Fed, the Bank of England. Most of them do a large part of balancing their currency using their reserves. Now, if you start to introduce like a gold coin, which is then being priced in cedi, even though based on the Bretton Woods Accord, you are pricing it against the dollar, you seem to have people now, if you want the gold coin, you have to then purchase cedi if you are from the outside world. So then that points the view of where, if I am from the other side and I want to buy more, I'll probably hope that the pricing of the currency is better. Then pushing for a view of the cedi being a bit more tradable worldwide, and also helps the central bank in regulating currency and inflation, and also managing liquidity over a span of time.
Yeah.
Done by the Fed, the Bank of England, actually.
No, I think that's solid input, and I think it's something we've not really thought about in terms of, well, if somebody outside want to buy, then they can't buy in dollars. They'll have to sort of buy in CD, which means they will then have to sell dollars and then buy in CD, and vice versa. So I think that is a good addition to make. Yeah, I think I feared for this question, but it is here, and probably we'll just see how best we can answer it. Benjamin Opoko Fofi is asking, how different is this from men's gold?
Yeah, I mean, completely different. Completely different.
Then talk us through it. Because I
Yeah,
think,
so,
I mean, rightly so. I'm sure once you talk gold in Ghana today,
yeah.
everybody is men's gold, and we
Yeah.
know all that has happened in the last 4 to 5 years, where people have actually, in some quarters, there have been rumors people have lost their lives, because their investment got stuck. So I think it's good to sort of clear the air here in terms of, how is this very different from men's gold?
Okay, so it's completely different in the sense that one, this is being issued by the central bank itself. They have the sovereignty to do things like this. Men's Gold was an individual company and didn't have the sovereignty to issue out gold, I mean, in any form. Number two, Men's golds were not real golds. The golds they gave to people were Ali Terem or something. Later on, it was figured out that they were not really actual golds, right? So people who even kept the gold in their custody at the point of collapse of couldn't even sell to anyone, even to a goldsmith, right? So Men's Gold was also wasn't really selling gold. They were selling something presumed to be gold, right? And also the pricing mechanisms were kind of completely different. In Men's Gold's case, I mean, they were the reference for their gold prices were quoted by them, not like a trader, right? They were quoted by them, and mind you, you see, Men's Gold was like, I give you a fixed return. Completely different from how gold in the international markets really they move
operates.
You see, like BOG is trying to show you the reference source of where you are getting the gold. But Men's Gold was like, hey, my gold, I have a special kind of gold. Irrespective of every month, you get 10% for that gold. Right? So Men's Gold was like a creation of their own gold in their own, and it was just more like nothing smaller than a Ponzi scheme. The gold was just given, sorry not to say a Ponzi scheme, but I mean it's still but it was a questionable gold, right? Which I haven't seen one before. I mean, after Men's Gold, I haven't seen any gold that is promising you 10% every month and doesn't go down, so it's completely different. The dynamics are different, even though they use the same. The term gold can be a bit confusing, but what is a Men's Gold? Yeah,
I agree. I think the summary here is this, and to our listeners and viewers, the summary here is this: Bank of Ghana has the sovereignty to roll out financial products onto the market. They have the sovereignty to issue licenses to anybody. They, by law, have the sovereignty to actually roll out this gold program, and that is what backs them. The sovereignty of Ghana backs BOG. And so I think from that perspective, we're looking at the regulator of the industry who is best positioned to roll out a product like this. They have done their background assignment. They understand the framework. In fact, they are the sort of anything that goes out of Ghana needs to go through BOG. Anything that comes through Ghana needs to go through BOG in terms of exports, imports, etc. So I think they are well placed as an institution to be able to roll out this type of product and have a comprehensive program around it to ensure it's safety for investors as well as its viability on the market. And clearly they've stated that, look, this gold will be priced according to market forces. So there is no underhand here. There is no promise of any return. There is no promise of, fixed rate or anything. For any investor, you can actually price daily what your investment is, by simply going to the London Bullion website to see what the today price of gold is. You can go to Bloomberg to see what the exchange rate is. And with those two data points, you can be able to sort of value the investment that you want to buy or that you want to sell. So I think clearly, I mean, this is a very different move from what Men's Gold sort of proposed or had in the market. And we do think as financial professionals that I think BOG has proven over time that they are responsible and obviously have the mandate to power the industry. So yeah, I think that answers that on the Men's Gold. And I think Emma, there's a key question here, and I think we discussed this earlier. It says how much gold is available for this program, and this is from Eugene Tewia. It says how much gold is available for this program from BOG. Will we have a scenario where there is more money looking for gold than the gold available to purchase? I think this is a solid question.
Okay, so I think AJ kind of threw out some statistics next to that question. Given the hardcore numbers as to how much gold that is currently held in the vaults of most of these countries. We're putting Ghana at 8.7 tons, and then Nigeria 21.3, Algeria 174, Libya 140. So basically, those hard numbers have been decoded there. I think the second question was is there more money looking for gold than the gold available to purchase? Yes, definitely. I mean, if I get the question right, there is always more money in circulation, right, than available gold that the BOG will hold, right? Because if you look at the M2 plus money supply, which is the sum of all the money in circulation in the system, definitely it is small. We only hold as much as we can for normally 3 months cover of imports, because you hold gold. I mean, at a higher level, central banks are like institutions that trade among themselves based on right? So I'm importing this, I need your money, you're importing this, I need your money, so I can hold gold as against that, right? But when you come down and cascade down into the economy, there are people that are transacting on a daily basis and need fiat currency to be moving around. So definitely money in circulation is always bigger than or higher than money that's or gold that you have in your reserve, right? Basically, so yes, they are actually, but not will all the money move towards gold. No, some are to several different reasons. I mean, buying and purchasing, importing, right? You hold gold for store of value. So you have to look at the money in the monetary system that actually is going for the store of value, which is people's savings.
Yeah.
Right? So if you look at even the computation of GDP, where you have the government spending, consumer spending, and then you have the net import export, then you have investment. You always realize that the investment components or the savings components are quite a small fraction of whatever it is. So I mean, and the monetary value of the entire economy makes up the GDP. So it's always, I mean, logical that it should be more than the gold in reserve. I mean, but then you can go in there. The numbers are not something that I've actually looked at, but from a higher level, that is how you're supposed to function for us all to kind of.
Yeah, and I think it's I think it's a very interesting dynamics, in terms of if there's too much people now looking for the gold, etc. The trick here is, will it at any point in time impact price? And we need to think about it. I don't know how that will be, because again, demand and supply, but at the same time, will it be sufficient to move the market on a global level? Because gold is traded globally. If a lot of Ghanaians are looking for gold to buy, will that impact gold prices on the global market? And then there's also a small component of the interest, the Ghana cedi rates. Will people now being interested in gold reduce the pressure on the dollar, and then obviously drive down demand for dollar? So I think this is obviously the essence of this call, to provoke the thoughts, to get people engaged, to have the conversation and see where it leads. But I mean, several interesting questions that have come up.
Okay. So basically, so let's look at this analogy, right? I mean, on a very high level, from an economic level, right? The gold purchase program is going to help reduce money in circulation.
Yeah.
Because money in circulation will kind of move toward the purchase of gold. So if it reduces money in circulation, there's one resultant impact. The currency stabilizes or becomes strong, which is the objective of the central bank.
Yeah.
So in the event whereby more money is actually moving towards the purchase of gold, right? Remember, Ghana cedi is printed by the central bank.
Yeah.
And it's like an avalanche, you know.
Yeah.
They have enough supply of that.
Yes.
Right? So if there is enough supply of that, and they are actually mopping that to chase the gold, right?
Yeah.
Eventually stop the gold. And where in the event whereby, if I happen to be Bank of Ghana, whereby there's so much demand for my gold, means that my currency is becoming stronger, and I can easily go to the international market and even pull some and bring them down, or
bring them.
So that hypothetical situation, I mean, in economics, really, there are several variables playing out at any resultant point in time, right? So it might not necessarily be as simple as we are talking about, because there are several variables that are moving that you have to make a decision. But then it is a good sign. If we have a lot of Ghanaians moving in, monetary wise, it's kind of a good thing for us also.
I think, look, it's interesting dynamics. We've always, in fact, I think in my mind, this product has been long overdue, because the potential of gold to drive down inflation and just stabilize is really something that one needs to look at. I just think that we need to see how it pans out in terms of volumes, in terms of investor interest in going down this route of holding gold instead of cedi currency, or in this case, people trying to secure their wealth by buying dollars. But let me just see if there are any questions. I don't see any further questions. So I take it that it looks like people are confident that we want to do this gold business with BOG. Just give me a second. Let me check to see if I have one more for you. So maybe just to summarize the thoughts, and I'm curious here. When one is going into this GCC play as an investor, would you advise, and obviously just maybe take it you're advising me now, not the whole public.
Yeah.
And I come to you and say, Emma, I want to play this gold market. I want to be active. I want to do, I want to look at the price today. I want to buy, and I know the price will go up tomorrow. I want to sell. Or would you advise me to go for the long-term play here, where, look, just think of it as wealth preservation? I mean, this is not active market play where you're trying to beat the market and make profit. What do you think of this scenario? Is this like a active trading space where, as an investor, I must look to play and be profitable, or this is for long-term wealth preservation?
Okay, so I mean, I'm always biased towards long-term, right? Sometimes it's very difficult, because in the short term, some people can make gains just like that. There have been investment opportunities whereby in a split of a second, people have just spin out. But then I believe that in the long term, you stand to have more stable, right, returns, and you stand to have more stability. To me, is very important, right?
Yeah.
Stability to me is very important. So I think people should rather buy it. Why do people buy? I don't know what you buy your dollars for. Do you buy your dollars to use them later on, or you buy them just to play the ride? Right? If you buy them to play, and you are speculating. Remember, speculation is not bad. Speculation kind of brings into the market because the one buying and selling tomorrow will be able to give availability to somebody who wants to buy it tomorrow for long term, right? So then I always advise people that first of all, seek investment advice, get to know your investment objectives, right?
Yeah.
What to achieve, and then execute based on that. But if I'm really a medium to long term play, I like that space, right? Because I mean the short term is nothing than just like predicting on people's emotions and how the market will behave. Sometimes short term up and down doesn't even have any fundamental basis. It's just that hey, it's just
it's just complete that I think prices will go up.
Yeah. Somebody is actually in the market in need of something at this point in time, so there's a high demand, so it goes up. But that demand is not sustainable. It might not repeat itself tomorrow, or it might not repeat itself again, right? So if you go in there and then you are speculating, you should understand the market. And this is a whole new investment, right? You need to understand before you even decide to speculate. Otherwise, you'll just be gambling with your money.
Yeah. Ima, I have a very interesting question here, and I, if I were you, I don't know how I'll answer this, but there's a tricky question here. It says that, look, so we're talking about this currency stabilization, etc., and that the more people move towards this gold coin, there's a potential that the Ghana cedi will strengthen. Yeah. Now, remember that this gold is traded in cedi. So, assuming today I went to buy at 16 times whatever the gold price is, call it 2,000, and now BOG has won on the gold coin front. People are going towards it. The currency is reducing. And it gets to maybe 7 cedi to the dollar. And I have gold and I want to sell. I bought it at 16. Now I'm going to sell at 7. What are your thoughts on this?
I think it's a very nice hypothetical situation.
I know.
Listen, the truth is that every investment comes with its own risks. And that's that's one thing when you are studying economics, it's like really it's a zero-sum game. You see,
it's a zero-sum game.
It's something we just don't say. But right, that's why you are always advised to diversify your investments.
To diversify, right?
Yes. You know, when even in our normal investment, when you are holding stocks and immediately when interest rates are up, you realize that the bond holders are making a lot of money. And equity holders seem to have most of their prices being like squeezed or constrained, right? Immediately interest rates moves down, they understand. And then interest rate, the reverse. Equity, more like people want high dividends, they move into equity. Those who have already bought yields, they stand to gain on capital gains on the bonds. Those who are coming in fresh seem to be going in lower. So it's more like playing in this economics is like a Nash game, right? It's like you're playing Nash. Every outcome every investment decision has an outcome, and it's actively because you are actually investing against people who are also making logical decisions and actively making decisions based on that. And you have a central bank and also a finance ministry which is managing the fiscal policy, all making all based on different objectives you want to see, all based on different expected outcomes. Right? So some of it, there are several variables that are happening, right?
They're working here.
So that is why I always say, always seek investment advice. It might look very simple. From the you buy this, you get this. You buy this, you get this. Right? You buy the T-bill with free rate or maybe DDP or something hitting, and you realize that, oh no, I didn't really look at my risk very well. So always seek investment advice. There's always someone to move in and move out. But then remember that it won't tank in a day. There will be momentum building.
Take time, so you can always choose to exit at any point.
Exactly. Trends are reversing. So at that point in time, you have to always make sure that, hey, maybe I have to make a move now.
But you see, I think thinking about it now, I think it's a great point. But if the ultimate objective is to bring down the cedi, while in my mind, you may lose a little bit on gold, I'm telling you, your other aspects of life will be great, because now I can buy tickets to travel easily, because now I don't have to be buying tickets at 16 cedis. Rather, I'll buy at 7 cedi. Inflation comes down on the market, so I can go and buy a tin of Ideal Make at 4 cedi instead of 8 cedi. So there's a ripple effect of lower currency impacting the general economy. So yeah, it's interesting dynamics, but I suppose it will play out, as it becomes real, as to whether the cedi will go down to 7 or 8 cedi where we previously were. It remains to be seen. But I think it's something which is food for thought, in terms of how this will impact the whole economy.
Exactly.
I think I have a few more questions, and I'm liking the fact that this is interactive and people are sharing their thoughts, because I think this is the whole idea, to engage, to provoke thoughts, and to get people to understand what the product is.
Yeah,
So
exactly.
James Kobinayale is asking, looking at it as an investment option from the government, how does it compare in terms of returns with other government instruments like treasury bills or bonds?
Yeah. So I mean, so we can reasonably compare it by looking at gold prices, right? Reasonably compared by gold prices. Now, gold and what do you call it? Gold prices as against the USD has relatively been flat in a way, but gold prices recently, but in a long time, I mean, there are studies to prove that over a long period of time, gold doesn't really give any high value, right? Return. I mean, it's just reserve value. You see, gold is like whatever value it has is able to sustain its real value, right?
Yeah.
But then, so basically, without even looking at the numbers, I would think that gold will have to, in a way, the price will have to mimic how the USD is going, right? It has to mimic how the USD is going, or slightly better than that if there's there's a global economic uncertainty. Gold normally goes, but then on average, why? Then we compare USD investment to local currency, right?
Yeah.
Over a long time, I mean, the USD local currency, I mean, has on average like 18%, right? Really over a long time period. I mean, it keeps on changing because it's an active market. But then you can see that there's always an 18% spread advantage.
Yeah.
That's if somebody holds the dollar for a long time, because the cedi is always depreciating, right? Without even looking at the hardcore numbers, I mean, it's a positive carry, it's a positive value. If the cedi keeps on at the rate at which it has been depreciating, right? It's a positive value, because I mean, you treasury bills will give you a 30, even if it's giving you 23%, 24%. In a typical year, you have like 18% depreciation, or even you have like a 20% depreciation. That's like 3% on your USD compared to a USD conversion, right?
Yeah.
So you need a certain price point to always be able to compare to that. But then, honestly speaking, compared to T-bills, they can be neck to neck, or gold will be slightly a good investment, right? It's can also go the other way around. And in investment, there are certain technicalities also there, right? For example, those who buy long-term bonds can make some capital gains when prices or interest rate goes down. So there's a lot that goes in there also as well. It's something that you have to consult your investment advisor, and then he can walk you through how the numbers look like.
Yeah, fantastic. I mean, back to the basics, I think it's crucial. Whatever investment one wants to do, you must engage your financial advisor, get some additional thoughts. I think it's been interactive so far. We'll be wrapping up in the next 10 to 15 minutes. And so if there are any final thoughts or questions, but I think it's been a great session in terms of unpacking a bit more. I mean, we could go on and on and on in terms of what the dynamics would be, how it would impact. In fact, there's a follow-on on the question that we talked about, that is it possible for us to say that the abated 7 CD will be more valuable than the 16 I purchased it for? I mean, like the point I was trying to get to, that if the CD does come down based on all of this that is happening, the gold, and all that, there's some intrinsic value there, where now, because things are rather cheaper on the market, it's like you've not really lost value per se. So those are like questions or things that one can think about and that it impacts. But again, I like these thoughts from Rich Dankwa, and is a bit apprehensive in terms of whether this will actually, cause the type of impact that we are saying it may. So he says that, I seem to disagree on the hypothesis that the gold coin could possibly lead to strengthening of the CD. In my mind, there are fundamental reasons why currency depreciates, major among them being high imports, less exports. If the fundamental issues are not fixed, Ghana coins would do nothing. After all, Ghana is one of the largest producers of gold in the world. Has that alone made the CD appreciated? And I think, look, it's the commentary is fair, because we've been here, we've seen it, we've done that, and we've had a lot of conversations around how can we strengthen the CD, and it just seems like it's getting worse every day. But I think at the same time, those fundamentals that we talk about are real, and if we don't address them, true to the summary, the gold coin, depending on how many Ghanaians will even have enough money to buy the gold coin, remains a question. So yes, there are issues outside of the gold coin that needs to be addressed, and I think it's probably work in progress. How long that will take, we don't know. But I think one of the goals of this GCC program is to help in stability. It might not be 100% the solution, because remember, one of the reasons the CD got to 16 was there was a lot of speculation last year, where people were not sure if there will be dollars on the market, etc. And people were using CD to buy dollars to hoard. So if there's another appropriation of this CD to have a gold coin that reserves its value, then it stands to reason that people will not be rushing to buy dollars if they don't need it. So I think there are a number of moving parts that needs to be pulled to get to that point where we have a stable currency. And definitely GCC is not 100% the solution, but a small part of the solution. What do you think, Emmanuel?
Yeah. I think, you see, no amount of like short-term measures can stabilize the currency if there are fundamental and structural problems, right? But then speculation can be minimized.
Yes.
Speculation can be dealt with, right? And that is what the currency currency stabilization comes in. And more also, it's hypothetically, like realistically impossible, but hypothetically possible that you have everybody moving after gold. Let's say we are a GDP of almost 64 billion USD, right? Compare that to our gold reserves. Compare that to how much money. There are a lot of things that money does.
Yeah.
Right? Even if you buy gold, what are you going to use it? So it's a hypothetical situation. But in the short time, speculative funds that move against dollar because they want to put it aside because they are afraid of losing their city will have an alternative. And therefore reduce the speculative influence on the depreciation, but the fundamental influence and the structural influence remain intact because because those are fundamental. We need money, we need dollars for import, we need dollars for import. It's as simple as that.
Yeah. I think, look, the Ghana issues are a lot. I think, and every day we try to make it count. And I think as finance professionals and everybody on the call, different industries, wherever industries you may be, I think these are conversations we need to have. We need to keep talking about it. We need to get to a point where we need to unpack the economy as it is and try to find relevant solution. And I think James Kopnayali has a thought here. He says that on the currency stabilizing part, eventually government is going to buy oil. certainly government will need to exchange cedi with the dollar. Dollar comes through exports. Our exports are still bad, and we are still going to have more cedi chasing very few dollars. And I think this comes to maybe a concluding thought that I think Ghana as a market, and maybe away from the GCC conversation just slightly, we need to start thinking how we can be a producing nation, a manufacturing nation, a processing nation, where our raw materials are processed at least to a second, third level before we export them to create more value. I think for me, that is really the underlying where we can actually plug some of these gaps, because if we're selling our cocoa raw as it is, we lose a lot of value. The cocoa industry alone is a multi-billion-dollar industry, and yearly we only get less than $1 billion or $2 billion from that industry, and several other industries that you can point to see that, there is ability for us as a nation to solve for to cause the currency to be stable. Maybe we'll take 2 or 3 questions more, and then we'll call it a session. I think it's been great engaging you, Emmanuel. To be honest, I've had a lot more thought about this GCC in the last couple of days. I do see there's potential. I think implementation is key. I mean, it's nice on paper, but when you start unpacking all of the risk associated with it, the question is whether it is worth your while as an investor. And I think that for you and me and for all of us on the call, that's work we need to go out to do. We need to ask the questions. We need to ask some questions like, can I use it as collateral in my future, activities? If the cedi depreciates or gains value, do I lose my value in the gold? Those are some of the thought-provoking questions we need to leave this session with, and try to get some answers from before we invest. I don't see any further question. Emmanuel, maybe can you give us maybe your concluding thoughts, and then maybe we can wrap it up.
Okay, thank you. I thank you all. First of all, I'd like to thank you all for the time, and also for the engagement. I think it's time that industry experts and also professional groups and organizations within the country also kind of air their views on issues like this, and collectively also work together with stakeholders to ensure that, our market is actually attractive, and our market is actually a very pleasant market for investors and for everybody to engage in. Also, with regards to the slides, I will share a link, and then I'll make sure I'll post it on my link, which is a Voice of OJEM. You can go there. I'll show some link. We'll upload it, so you can copy the link and they go there, so that everybody can download it from that place, and then becomes more like a place where you can get to. We will also try and see if we can upload the FAQs from BOG, so those that haven't yet seen it will also be able to download it from that point. But then I think it's been a great discussion. I've really also learned a lot from the questions that came in, and the dimensions of thoughts, and also the contributions that our participants had brought in. And I also would like to use this opportunity also to thank the CFA and society, and also treat them to kind of host similar, let the fire continue on several dimensions, because there's a lot of things that are happening in the market that we need to kind of bring to public attention and also public knowledge. So that's my concluding words. Thank you.
Thanks, Emmanuel. I mean, I couldn't agree with you more. In fact, it's been an enlightening session, and even for me as a finance professional, ahead of the Ghana gold coin, just in passing and all of it, and this session has given me an opportunity to actually read, it more, to see what are some of the key concerns or the key learnings from it. And this session has actually been eye-opening. In fact, I'm impressed by the number of people who were able to join us, noting that it's just about midday and people may be at their various workplaces, excusing yourself to dial in. I think we cannot thank you enough. I think the CFA Society Ghana is growing in its influence amongst or in terms of its contribution to the industry in Ghana. And I think we need more of this session where we can engage and share ideas and thoughts and make it head. So I mean, thanks everyone for joining us on this session. We will get back to you. I mean, if you have any lead-up questions or follow-up questions, do send it across, and I think we'll take it up. We'll see how do we engage the BOG even more to give us some of the answers that are lacking. How can pension management funds, plug into this and be able to participate fully in this? These are some of the things that, as industry professionals, we need to be able to push for. And then, yeah, thanks so much. I don't know if there's any concluding thoughts from AJ, and then we'll call it a session. But I have been your moderator, Elias Emisa, and it's been good to host you, Emmanuel. Thanks so much, and then we'll keep in touch by all means.
Yeah.
Thanks,
Thank
AJ.
you all,
Over
guys.
to you.
Thank you all. Thank you all.
Yeah, everybody, thank you very much. I think this is part of an ongoing series that we will try and bring more as time goes on. I would like to sort of thank the guest speaker and the moderator for such an excellent job. Feel free to engage with CFA Society Ghana on the various social media. I believe that we get a lot more active on LinkedIn. So let's engage. And I am of the firm belief that if the country is going to get better, it requires people like those on this platform to all contribute. So thank you all once again. And there'll be more new activities and various webinars coming out.